Hello everyone, welcome back. My name is Greg Furman and this is the Forex Weekly Outlook for the week of October the 15th, 2018. Now, to get started this week, we're going to begin where we always do with that all-important US dollar index. Now, something a little bit new we're adding this week into the VantagePoint software. We're using verified support and resistance zones into the an add-on for the current program. Highly effective in identifying critical zones where the market potentially could fail. So as we can see, the dollar has come up into a verified zone. We failed here at or about the 95.85 area, the same level I talked about in last week's presentation, suggesting the dollar would move lower. Now, we are seeing some support forming, however, down here at the critical VantagePoint long-term pivot area at 94.88. We're closing 94.91. That is still a concern here, guys, that the dollar could pause and move higher from here. Now, again, the dollar is still in a technical uptrend on a year-over-year basis, but absolutely struggling anywhere above the 96 level. Our indicators from VantagePoint, our neural index, is still pointing lower, but we can assess here that the RSI is starting to find a bit of a bottom here. So towards the latter part of next week, we could see the dollar start to rebound, which would be perfectly normal, but that usually doesn't occur until the end of the month or the first week of the new month. So we're likely to still see further dollar selling, but not aggressive dollar selling. Now, when we look at that and compare that in relationship to gold, for the dollar to really come under pressure here, guys, in my respectful opinion, gold must move above approximately 1248 and close above this area so we can get out of this channel. Now, currently, again, every time the market has come up into these zones, we've seen a failure. So I'm not anticipating anything different here. The Fed, remember, guys, that the Fed, while not super hawkish, they were not dovish, in my respectful opinion, in the least. So they're still going to continue to hike, all of which is a negative for gold. So I think we'll still see big money look to short gold towards the 1240 area if we can even get to that particular level. Now, in the equity markets last week, a disastrous sell-off here, but the first thing I'll point out, guys, is that we've had some sideways chop, but essentially right here, when the VantagePoint triple cross took place, that was essentially on October the 4th, guys, where we got our first sign that there was something very, very wrong in the equity markets. We've got a verified resistance zone up here at 29.45, 29.50, and that led to a significant sell-off. Now, I am seeing a potential as we come back further. We've got a verified support zone here that very well could hold, but you can see that we have very, very heavy support identified here in VantagePoint all the way down to 26.15. Now, this particular bar from Thursday is the bar the low point of that bar is the one we really want to watch at 27.13. If we push below 27.13, the S&P 500 could extend lower, but in reality, it's likely to hold where it is for now. But again, very, very choppy price action. But as the market's paused here, we can see the predicted RSI is starting to turn higher. Now, we can assess that we're seeing the same thing on oil prices. We've bottomed here right now. So we're waiting to see if momentum can build to the downside. So if the S&P 500 continues to move lower, it's likely to take oil with it here. So be careful around these contracts next week. Excuse me, but the area you want to watch would be around 70.37. If we push below 70.37, again, we could be getting ready to extend lower into these lower two zones. But that's a tall order going all the way down into the $63, $65 per share or per barrel mark. Could be a tall order. But again, at this time of year, in most cases, oil is weak at this time of year. Now, as we look at our major Forex pair, the pair that has the highest correlation to gold, in my respectful opinion, is the euro. So the euro right now has closed just below that critical pivot area at 115.75. We're closing 115.57. bit of profit taking happening on Friday, which is perfectly normal. But this particular zone down here, again, in my opinion, is the one to watch, 114.32. But right now, the predicted differences are still rising. My concern here is the predicted RSI. The predicted RSI is suggesting that we've lost that upward momentum. This, again, could point to a recovery in the middle part of next week on the dollar. So be very, very cautious with this particular pair. We're sitting down here in a support zone, but this latest run up, we are not getting anywhere near this 118 level just yet. But my hope is that the euro will still see further gains next week. Now, as we look at the counterpart to euro US Swiss franc, we are in a very identifiable, verified resistance zone that goes all the way up to 1.0065. With my own direct clients, we've been selling this one on a regular basis. So when we look at this right now, our critical resistance is coming in at or about the 99.55 level. But we also have the key vantage point pivot area at 98.27. I'm still looking for a test down to the 98.27 level, provided this verified resistance zone holds. Now, the RSI is starting to flatten out, just yet another indicator that the dollar could be getting ready to rebound here very soon. Now, as we look at the pound dollar going into next week, we can assess here that, again, very little has actually changed with the pound dollar, guys. Despite everything that's going on with Brexit, etc., we're coming back up to a known resistance zone here where we're failing yet again. Now, this could be just profit taking from Friday. The predicted difference is holding above the zero line, but the neural index is starting to turn down. I do like the position of the predicted MACD crossing the trigger where it currently resides above the zero line. But again, the RSI is picking up on a lack of momentum into this area. So when we look at that RSI and connect it to these verified zones, resistance zones, we've got a bit of a problem here, to say the least. For the real downside pressure to come off the British pound in my British pound US dollar pair, in my respectful opinion, we need to break free and clear of the 134 zone up here, this dark colored red area, and then we should enjoy some very, very good longs on this. But for now, I would be watching this area at 130.91, 131.27. You can see our short cross pivot area 131.66. We're actually closing below that, so there's a bit of a crack in the dam on the as everybody aggressively pours into longs on pound dollar. That may not be the case here, guys, so be very careful. Now, if we look at the dollar yen pair, this is very much going to be a equity trade. So if I come back here just for a moment to look at the S&P 500, you can see that we're in this verified support zone. We have a swing low here. So basically this current swing lower, at least for now, has come to an end. So how that relates to the dollar yen here, guys, is that essentially you can see we've got a yellow shaded zone on the VantagePoint crossover, suggesting we could find a base here at 111.70, but this pair will be determined by those equities. If stocks turn around next week, dollar yen will turn around with it. So we're going to keep a very close eye on that. Right now, the RSI is flattening out. And again, if we look at our short-term crossover from VantagePoint, it's starting to turn up, and we've got a neural index pointing higher. So if nothing else, we are likely to move higher at the beginning of the week, but it will all be dependent on those global equity markets. Now, with the US-Canadian pair here, guys, once again, I feel that we've got some potential opportunity here for shorts, believe it or not. When we look at our high point here from last week, 130.81, we've come back up and tested the first verified resistance zone on VantagePoint, and we have failed at this level 3 days in a row. You can see that our current support level is coming in at or about the 129.26 area. We're closing the week at 130.20, so there could be, if those equity markets turn around, again, in my respectful opinion, it's very likely that the US-Canadian pair will move lower, not higher. So right now, 129.79, the T-cross long, 129.89. If these levels break, then that is the first indication here, guys, that we are going lower and the equities will recover. And indirectly, that would mean oil would probably recover. So these are the things we want to watch on this particular pair next week. Same thing for Aussie US and New Zealand US. If I'm going to look at continuing to buy this, guys, we can identify using these verified zones very clearly that we have strong support at 70.44. However, we have strong resistance at 71.41. So right now we need to break free and clear and get above 71.41 if we're going to target the upper part of these resistance zones back towards the 73 level. I believe we will get there, but I'm not convinced that that's going to be next week. I think the Aussie and the New Zealand pair are going to move rather slow. When we look at New Zealand right now, again, both of these pairs are virtually dependent on gold moving higher. If gold cannot break out to the upside, guys, above 1245, then both Aussie US and New Zealand US will both head lower. They've had a good corrective move, but to be clear, at the given time, this is corrective in nature. So we have a busy week ahead next week. Not a lot of economic data on the docket, but enough to move the markets. So with that said, this is the Forex Weekly Outlook for the week of October the 15th, 2018.